Okay, the next topic of our course we will talk about will be devoted to the evolution of digital banking. So I'm really excited to take you through the fascinating journey of how banking has transformed in the digital age, and we'll explore the key milestones, technological advances, and innovative disruptions that have shaped modern banking. And what particularly interesting about this topic is how quickly the landscape has changed from the first ATM to today's AI-powered banking solutions. And by the end of this lecture, you'll understand not just where digital banking came from, but where it's headed. And I've been studying and working in this field for many years, and I can tell you that the pace of the innovation is only accelerating. So let's begin. Let's start. Let me take you back to a pivotal moment in banking history, the year 1967. Therefore, on a rainy day in London, something revolutionary happened. The world's first ATM was installed at Barclays Bank. And I find this moment fascinating because it marks the true beginning of self-service banking. So you see before this, every single banking transaction required you to physically interact with the teller. Yeah, please turn off the microphone. Thank you. So, and you can see that before this, every single banking transaction required you to physically interact with the teller during bank hours. And can you imagine the limitation today? So this ATM was really the first step in giving customers control over their own banking experience. And it's quite remarkable when you think about it. This simple innovation laid the groundwork for all the digital banking services, those we take for granted today, for example. And then came the 1980s, and another breakthrough emerged. Phone banking. And for the first time in history, actually, people could check their balances and make basic transactions without leaving their homes. So what I want you to understand is that these weren't just technological innovations. So because they represented a fundamental shift in how banks viewed customer service and accessibility. So they were the first steps towards 24/7 banking and the world of this continuous service we live in today. So each of these early developments really changed the traditional notion that banking had to be done face to face and during business hours and in a physical branch, for example. The next slide. Now, let me share with you what I consider one of the most transformative moments in banking history, which is the launch of Security First Network Bank in 1994. So this was the world's first internet-only bank, and I can tell you that it was met with plenty of skepticism at the time it arrived. And many people couldn't imagine trusting their money to something they couldn't physically visit. And what's particularly interesting about this period is how slow the initial adoption was, really. And so let me put this in perspective for you. For example, in 2001, only 30% of US adults were using online banking. And the main concerns, what were the main concerns? For sure, security, website stability, and those painfully slow dial-up internet connections, for sure. So remember those. But watch what happened as broadband internet became more widespread, for example, by 2008. And that number jumped just to 68%. That's more than double in just 7 years. So here's something else that dramatically changed the landscape. And for example, the Check 24 Act of 2003 in the United States. And this legislation essentially gave digital images of checks the same legal standing as physical checks. So why was this so important? Well, it paved the way to one of the most convenient features we have today, which is remote check deposit. So you can think about it. Before this, everyone had to physically visit a bank to deposit a check. And this legal change was really crucial in moving banking into the digital age. And by 2005, we hit another significant milestone, which was over half of all of the banks were offering online bill pay. So this wasn't just about convenience, it was about fundamentally changing how people managed their money. So now let me tell you about what I consider the most significant shift in banking service since the ATM appearance. So which is the mobile banking revolution. So the tipping point came in 2013 when global smartphone adoption crossed the 50% mark. And this really wasn't just another channel for banking. It was a complete reimagining of how people could connect and interact with their money. And now, what's fascinating, really, by this time, over 80% of banks had developed their own mobile apps. And now, let me tell you why this was revolutionary. So suddenly, your bank wasn't just in your pocket, it was available 24/7. For example, whenever you had a cell service. And one feature that really drove adoption was a remote deposit capture. So you can think about how transformative this was, really, because you could deposit a check while sitting at your kitchen table, for example. But the numbers tell us incredible story, really, because by 2016, we were looking at nearly 3 billion smartphone users worldwide, and that's billions of potential mobile banking customers. So, but here's what I find particularly interesting here is that regulators played a crucial role in this revolution, really, because they didn't just sit back and watch, they actively developed mobile banking security guidelines. And this was really essential because it helped build customer confidence in mobile banking. And after all, people needed to trust their money were safe before they would embrace banking on their phones. The next slide. Now, this is where things get really interesting. So the emergence of what we call neobanks. So let me tell you about companies like, for example, Simple, Chime, Robinhood, and so on. These weren't just new banks, they were indeed complete reimaginings of what banking could be. Because what made them special? They really started with a mobile-first mindset, targeting, for example, younger customers who wanted banking, for example, to be as easy as using social media. And here, what is particularly fascinating is how these challenges force traditional banks to respond. For example, if we take Chase, for example, they launched Fin, their own digital-only bank. And Citi did the same with Citi Gold, for example. But why? Because they saw these new banks weren't just taking customers. They were changing customer expectations about what banking should be. And these neobanks had a completely different approach. No branches, no legacy systems to remain, and most importantly, no traditional banking mindset to overcome. So they focused on what younger customers wanted, which were high interest rates, zero fees, and digital experiences that actually made sense. So it's a perfect example of how disruptive innovation can force an entire industry to evolve. So from my perspective, this was the moment when traditional banks realized that digital wasn't just an add-in feature, it was the future of banking itself. So now let's talk about another game-changing moment in digital banking, the launch of Venmo in 2009. This might seem like just another payment app now, but it completely transformed how people think about sending money to each other, actually. Because what I find remarkable about this development is the sheer scale of the transformation. Because by 2021, peer-to-peer payment apps were handling over $175 billion in transactions. So let this number sink in for the moment. So that's not just people splitting dinner bills. That's a fundamental shift in how money moves between individuals. So, and what makes this particularly interesting from my perspective is that P2P payments represented something entirely new. This wasn't just digitizing an existing banking service, it was really creating a completely new way to move money that bypassed traditional banking channels entirely. And before Venmo and similar apps, if you wanted to pay someone, you needed to either have cash, write a check, or go through a complicated bank transfer process. But now it is as simple as a few taps on your phone. So this is a perfect example of how digital innovation isn't just making existing services more convenient, it's really creating entirely new possibilities in finance. The next slide. Now let us consider what I believe is one of the most transformative developments in modern banking, which is the open banking revolution. So the catalyst for this change was the introduction of the regulations like PSD2 in Europe, for example. And now, why was this so important? Well, for the first time, banks were required to share their data and capabilities with third parties if customers gave permission, of course. But what excites me more about open banking is how it's fundamentally changing the relationship between banks and innovation. And through APIs, for example, and aggregated tools, we are now seeing an explosion of new services. For example, those that can analyze your spending patterns, automate your savings, and give you personalized financial advice, even in ways that were never possible before. So you can think about it in this way. Traditionally, banks kept all their data and services locked away in their own systems. But with open banking, we are moving towards what I call banking ecosystems. So your financial data can now flow seamlessly between different services. For example, enabling new forms of embedded finance and fintech collaboration. So this isn't just really about making banking more convenient. It's really about reimagining what banking services can be. And finally, from my experience working with these technologies, so I can tell you that we are only scratching the surface of what possible. So now let me share with you how digital banking is breaking down geographical barriers in fascinating ways. So what I found most remarkable here is how services like TransferWise and Western Union are now handling over $5 trillion annually in global money movements. So you can think about the scale of the moment. It's a trillion with a T. So, here's what I find even more exciting. That is the impact of digital banking and developing markets. Because let me tell you about what's happening in Kenya, for example. Mobile money apps have completely transformed how people access financial services there. In fact, they've brought banking to populations that traditional banks never reached. And this isn't just about technology, it's about really financial inclusion on a global scale. And what we are seeing is a fundamental shift in how money moves around the world. Because before digital banking, international transfers were slow, expensive, and often inaccessible to many people. And now anyone with a smartphone can send money across borders instantly. So, and that is why, from my perspective, this democratization of financial services is one of the most important developments in modern banking. And it's not just making existing services more efficient. The next slide. Now let us consider something that keeps traditional bankers up at night, I would say, the entry of big tech companies into banking. So when I look at the partnerships like, for example, Google, Apple, and Goldman Sachs coming together to offer digital wallets and credit cards, I can see a fundamental shift in the competitive landscape of banking, even. Because here's a striking statistic that really puts in the perspective for example, for about 95% of banks fear losing business to these tech giants. And they have good reason to be worried, actually, because you can think about it. These companies already have billions of users. They have deep insights into customer behavior, and they have incredibly sophisticated technology platforms. For example, when Facebook announced they were exploring their own cryptocurrency, it sent shock waves through the banking industry. And here, I find it very interesting about this trend. That is how it blurs the lines between technology and banking, because these aren't just tech companies offering payment services anymore. It's just about their becoming financial platforms in their own right, I will say. And from my analysis, for example, this represents one of the biggest challenges traditional banks have ever faced, actually, because these tech giants have something banks, I will say, desperately want. For example, deep daily engagement with customers and mastery of their experience and so on. And they are leveraging these advantages to reshape the future of the payments and banking, for sure. Next slide. Now let us talk about three key developments that I believe are revolutionizing how we manage our money. First, let's talk about predictive analytics. So, what fascinates me about this technology is how it can actually forecast, for example, potential cash shortfalls before they happen, before they even happen. And here's what interesting is over 50% of customers are actively seeking these kinds of insights. So because they want their bank to be proactive, but not reactive. And then we have auto savings tools, which I consider one of the most impactful innovations in personal finance. So because let me explain why. Because these tools take the psychology of saving money and automate it instead of relying on willpower, for example. And they also automatically move money to savings based on your personal goals. So it's like having a personal financial assistant working 24/7 with you. And finally, there is automated bill pay, which might seem simple, for example, but it has transformed how we handle recurrent payments. So you can think about it. Before automation, you had to remember every due day, manually initiate each payment, and keep track of everything yourself. But now it all happens in the background. So from my experience working with these kind of technologies, I can tell you that that automation isn't just about convenience. So it's about fundamentally changing our relationship with money management. Next slide. And now let's talk about through major developments that are transforming how banks interact with their customers. First, let's talk about data analytics. So what excites me about that is how banks can understand their clients now at an unprecedented level. So it's not just about knowing your services they use, but it's about predicting what they might need before they even ask for it. So then there is a social media integration, which in fact has completely changed the game in terms of, for example, customer service and marketing. And here's something that might surprise you. For example, 90 of the top 100 US banks are now active on platforms like Facebook. And why? There is a question, because that's where their customers are. So they're not just posting content, they are providing real-time customer service and building even communities. And finally, let's talk about targeted marketing. So what I find interesting here about this development is that is how bank can now deliver personalized offers based on the actual customer behavior and preferences. So it's no longer about sending the same card offer to anyone. It's about understanding exactly what financial product might benefit each customer at specific moments in their lives. And from my experience in the industry, I can tell you that these aren't just nice to have features anymore. I would say that they are essential components of modern banking. The next slide. So, and now let's talk about some sovereign statistics. For example, in 2020 alone, for about $16 billion were lost to bank fraud. And this is why security is absolutely critical in digital banking. And I want to walk you through these three key developments that are helping protect customers' assets. Sorry, just a minute. Sorry. We go on. First, let's talk about biometrics. And what is really interesting to me about this technology is how it turned something as unique as your fingerprint, for example, into a key that unlocks your banking app. And it's not just more secure than passwords, but it's actually more convenient for customers. And this is a rare win-to-win of the security world, I think. And next, there is cybersecurity, which really has become increasingly sophisticated. And from my experience, for example, working with the banks, so I can tell you that this isn't just about preventing attacks, it's about detecting and responding to threats in real time. And the investment in this area is massive, but it's absolutely necessary to protect customer data and transactions. And finally, we can talk about secure connections because what's the most interesting here is how encryption protocols have evolved to protect every single online banking session. So if you think about it, every time you check your balance or make a transfer, your data is being protected by the same type of security used, for example, by military organizations. And this is the level of protection which is required in today's digital banking environment. The next slide. So now let's talk about exciting development in digital banking that really transforming how customers interact with their banks. What I mean is conversational artificial intelligence. Which was implemented primarily through chatbots and voice assistant, and now it has become a game changer in the banking industry. Because what particularly fascinating is that our research shows that for about 86% of the banking customers either already use or are eager to try these conversational interfaces for their basic banking needs. And when I talk about basic queries, so I'm referring to things like checking account balances, reviewing recent transactions, or getting quick updates on pending payments, for example. So you can think about it. For example, instead of navigating through multiple menu screens, customers now can simply ask questions in natural language. So just as they would talk to a human banker. And this shift to conversational banking really, as to me, represents a significant evolution in how banks deliver customer service. So it's not just about automation, it's about creating a more natural, intuitive way for customers to handle their banking needs. And what makes this particularly powerful is that these artificial intelligence powered assistants are available 24/7. And for example, they can handle multiple queries simultaneously and continuously learn even from interactions to provide better service. And in addition, from my experience working with the banks implementing the systems, so I've really seen how they can significantly reduce the load on human customer service representatives simultaneously while actually improving customer satisfaction. So because this allows human staff to focus on the more complex issues that require personal attention and emotional intelligence. The next slide. Now let's explore another fascinating innovation in digital banking. That's bringing a human touch to remote services like video banking. So this technology is particularly interesting because it bridges the gap between traditional face-to-face banking and digital convenience. And what is very interesting here is about this trend is the ambitious adoption rate in the banking sector. So our data, for example, shows that approximately 2/3 of banks were planning to implement video banking services by 2020. So this isn't just a minor shift, it's a fundamental transformation in how banks deliver personalized advisory services. And the beauty of video banking lies, as to me, in its ability to replicate the personal touch to face-to-face meetings while simultaneously offering the convenience of remote access. So if we think about complex financial discussions like mortgage applications, investing planning, or wealth management, so this traditionally required in-person meetings. And now, through secure video connections, customers can have the same high-quality consultations from the comfort on even from their homes. And I want to emphasize here two critical advantages. First, video banking significantly improves the quality of remote service delivery because clients can see and can interact with their advisors in real time. And second, it enhances security because both the bank and the customer can verify each other's identity just visually, and they can add an extra layer of trust to remote banking relationships. So now this is really particularly valuable for high-value transactions or for complex financial discussions where building trust is very critical. So now let us talk about three groundbreaking applications of artificial intelligence and machine learning that are revolutionizing banking services. And these technologies are not just buzzwords, for sure, because I think they are fundamentally changing how banks operate and service their customers. First, let's talk about predictive analytics. With the massive increase in computing power, we're now able to process vast amounts of data in real time. And this means that bank can provide intelligent alerts, for example, and automated services that anticipate customer needs before they even arise. So, for instance, the system can predict when you might face a cash shortage or when you're likely to need specific banking services. And in the area of risk management, machine learning has really become absolutely crucial because this technology continuously analyzes patterns in transactions and customer behavior in order to identify potential fraud, for example. It's one of the application. And what is very interesting here is that these systems can adapt and learn from even new types of fraudulent activities, making, for example, our bank systems increasingly secure over time. And the third application, which I found really particularly exciting, is in investing optimization, because AI powered platforms are now sophisticated enough to analyze market data and individual customer preferences simultaneously. And this for sure enables truly personalized investment recommendations, and not just based on the general risk profiles, but on detailed analysis of market conditions, for example, individual goals and even historical performance patterns. And finally, from my experience working with the systems, so I've seen really how they can significantly improve investment outcomes while simultaneously reducing the time and effort needed to portfolio manage. The next slide. And now let us talk about three transformative aspects of blockchain and cryptocurrency that are reshaping the banking industry. So let's start with the blockchain technology itself. My research indicates that banks could reduce their infrastructure costs by up to 30%, for example, uh, um, uh, only by implementing blockchain solutions. So this is really significant because blockchain can streamline numerous processes, particularly in areas like settlement and clearing. The directions which traditionally required multiple intermediaries and time-consuming reconciliation. But now when it comes to cryptocurrency, I want to be clear about something interesting. For example, while Bitcoin was the first major application of blockchain technology, it's not necessarily the most important for banking future, because what's truly revolutionary here is really the concept of decentralized digital currencies and the technology underlying them. Even if individual cryptocurrencies came and went to fundamental innovation of blockchain technology, and that is easy to stay. And the third aspect I'm really excited about is smart contracts, because these self-executing contracts built on blockchain technology are fascinating because they can automate complex financial agreements even without requiring intermediaries. So you can imagine, for example, loan agreements or insurance policies or trade finance contracts that say automatically execute when predefined conditions are met. And so this not only reduces costs, but also minimizes the risk of human error and fraud as well. So from my experience, I've seen how smart contracts can dramatically reduce the time needed, for example, to process financial agreements from, say, days to minutes. The next. Now let's consider some compelling insights about how cloud technology is revolutionizing banking operations. So the numbers here are quite remarkable. By 2026, we are looking at potential cost reductions of up to 30% for example, for banks that successfully migrate to the cloud. And this isn't just about cost savings, though. It's about transforming the entire banking infrastructure. So what is interesting is that the contrast between adoption intentions and actual implementations, because while 77% of banks are planning to adopt cloud technology, I would say that there is still significant hesitation due to security concerns. And from my experience working with the banks, so I've really observed that this cautious approach is often rooted in legitimate concerns about data protection or regulatory compliance. So, and let me now highlight a specific challenge that global banks face, which is data residency requirements. The matter is that different countries have varying regulations about where customer data can be stored and processed. And this creates a complex puzzle for international banks, those trying to implement cloud solutions. For instance, a bank operating in multiple countries might need to maintain different cloud configurations for each jurisdiction they operate in. So, and real power of cloud technology lies in its ability to enable advanced analytics and simplified scaling. And moreover, banks can now process enormous amounts of data and quickly deploy new services without the traditional infrastructure constraints, even. And however, this potential can only be realized if I would say we carefully address the security and compliance challenges. And this is why I always emphasize the importance of a well-planned cloud migration strategy that balances, for example, innovation with risk management. The next slide. So now let me share a critical insight about the state of digital banking that often goes unnoticed. While many banks showcase impressive consumer-facing digital solutions, the reality behind the scenes is quite different. For example, would you believe that only 13% of banks currently have truly end-to-end digital operations? And this statistic reveals a significant gap between, for example, what customers see and what's happening in the back office. And from my experience working with the various financial institutions, so I've observed that the main challenges lie in the integration of legacy systems, because many banks are operating with what I call a technological patchwork. So, which means different systems for core banking, payments, lending, and the other services that have been accumulated over decades. And these systems really weren't designed to talk to each other, yet they need to work together seamlessly in today's digital environment. And what is particularly challenging is that you can't simply replace these systems overnight. So because they are processing millions of transactions daily, managing crucial customer data, and even maintain a regulatory compliance. So it's like trying to change the engine of an airplane while it's flying, because it requires careful planning, precise execution, and a clear understanding of these risks involved. The next. So now let me paint the picture of how modern banking customers interact with their banks. So the researchers show that for about 73% of the clients use multiple channels for their banking needs. For example, a static that fundamentally changes how we need to think about service delivery. So let's break it down into three critical aspects. First, there is flexible access, because today's customers expect a seamless banking experience across every possible touch point, whether you are using their smartphones, smartwatches to check balances, for example, or to make payments, or whether they use their laptop for detailed financial planning or visiting a branch for complex advisory services. So this isn't just about offering multiple channels, it's about ensuring each channel delivers a consistent and high quality experience. And the second aspect here, which I found really fascinating, is omni-channel integration. So this goes beyond just having multiple channels. It's about creating a unified system and where all these channels work together seamlessly. For instance, a customer should be able to start a loan application on their mobile phone, continue it on their desktop, and finish it in a branch without having to repeat any information. So, and finally, let's talk about branch transformation. That is, despite the digital revolution, physical branches aren't disappearing. So they are evolving. From my experience, I've seen branches transform from transaction processing centers into advisory hubs. So they're becoming, in other words, they're becoming spaces where customers can receive personalized guidance for complex financial decisions, and simultaneously the routine transactions shift to digital channels. The next, now let us consider let me take you to the frontier of banking technology, where three cutting-edge innovations are poised to reshape the future of financial services. So these aren't just theoretical concepts, because they are emergent technologies that are already being explored by forward-thinking institutions. First, let's talk about virtual reality. So while it's still in its early stages in banking, I find the potential applications fascinating. You can imagine walking through the virtual branch where you can interact with financial data in 3 dimensions, or For example, having immersive financial planning sessions with your advisor without leaving your home. And from my experience working with these technologies, I can really tell you that VR, virtual reality, has the potential to revolutionize customer engagement in banking. And quantum computing is perhaps the most transformative technology on the horizon, because the computational power it promises could exponentially increase our ability to process complex banking operations. So you can think about, for example, risk calculations that currently take days being completed in seconds, or artificial intelligence systems that can analyze market patterns with unprecedented depth and accuracy. And the third frontier is what we call ambient computing. This is particularly exciting because it represents a fundamental shift in how we interact with the banking services. So you can imagine your banking services being seamlessly integrated in your daily life through connected devices. For example, your refrigerator ordering groceries and managing the payment, or your car handling toll payments automatically, or your home managing utility, um, and their payments based on real-time usage. So this isn't just about convenience; it's about making banking services integrated, such integrated that they become particularly invisible yet perfectly functional. The next. So now let me outline 4 key trends that I believe will define the future of digital banking. And first, let's talk about the mobile banking. So all indicators point to mobile becoming I would say, the dominant banking channel. So this isn't surprising when you consider how central smartphones have become to our daily lives. From my observations, for example, this shift isn't just about convenience, so it's about the unique capabilities that mobile devices offer. And regarding the physical branches, I want to emphasize here something important. So while digital channels are really growing, I think that branches aren't disappearing. Instead, they are evolving to focus on complex financial needs that require human expertise and, for example, advisory services. So, and if we take into account wealth management, business lending, for example, or major life event planning, so these are areas for sure where human interaction adds tremendous value. And the third trend is what I call data-driven hyper-personalization. So because in order or because of the computing power increases, banks will be able to leverage robust predictive analytics in order to offer truly personalized services. So here we are moving beyond basic demographic segmentations to real-time and behavior-based personalization. And finally, the combination of automation and artificial intelligence for sure will transform both customer experience and security. And automation will continue to simplify money management, while artificial intelligence systems become increasingly sophisticated at detecting and preventing cyber threats. And I would say that this dual role of AI, taking enhancing both convenience and security, it is really in particular crucial for the future of banking. So we have come up to the takeaways of the previously said. So let me summarize the key points we've covered about the evolution and future of digital banking. And I think that these insights represent the most important trends and development that will shape the industry. So looking back over the past 50 years, we've seen a remarkable technological evolution because banking has transformed from a purely branch-based service to one that's increasingly self-service oriented. And they started from ATMs and evolving through online and mobile banking platforms. And what is fascinating here is the ongoing fintech disruption, because traditional banks are facing unprecedented challenges from new competitors who are reimagining banking from the ground up. And this competition is driving innovation across the entire industry. And the power of data is another crucial element, of course, because we are seeing increased computing capabilities enabling greater personalization, greater automation, and AI applications also. So from my experience, this is fundamentally changing how banks understand and serve their customers. And security for sure remains paramount as digital banking advances. So because simultaneously so do the threats. And here we are seeing continuous investment in fraud prevention and cybersecurity from the part of the banks. And so this, by the way, not just about protecting assets, it's about maintaining trust in the digital banking ecosystem. So looking forward, we can expect mobile to become the dominant channel while branches evolve to focus on complex advisory services. Because here, for example, hyper-personalization will become the norm, and automation will, I think it will continue to simplify money management. Perhaps here is the most important thing is AI, which will play an increasingly crucial role in managing and growing cyber threats. Okay, now we have come up to the quiz, a very short quiz. Please read the question and try to answer it in the chat. So here is the several variants of the answers. You can choose one or several of them, and please fill in the right answer or answers in the chat. So let's take a couple of minutes for that. Okay, Mahmoud, thank you for the answer. Any others? The same one? Okay. Okay, let's consider the right answer then. So yeah, you're quite right. The answer 3 is right. Process automation for transactions. Yeah, thank you very much. So let's go on. So here are several issues for discussion. So we do not have enough time, frankly speaking. That is why we will omit these issues. But if you have any thoughts, you're welcome to tell them. You can write them on the chat, for example, or tell them in voice. So I will be glad to be involved in the discussion, actually. So here is a short glossary in connection to the previous topics. So any questions on that?
No questions, Professor.
Yeah, okay. Thank you very much. So if you do not have any questions, so please give me a couple of minutes to switch on the presentation to the next topic, and we will proceed on.